Everyone is looking to you to get this right. If your parents have passed away and you're managing an estate in California, one tax rule matters more than most people realize: the step up in basis. And here's the truth. One small decision, like adding or removing a child's name from the deed, can quietly trigger taxes, wipe out a step up, and leave families with regret. It can affect capital gains taxes, property tax reassessments, whether you keep or sell the home, and how much of your parents' legacy actually stays in the family. We see this issue weekly in Orange County probate cases. Today, we are going to break this down clearly. No legal jargon, no pressure, just facts, timing, and next steps. By the end of this video, you will understand what step up in basis really means, how adding a child to title can spoil it, when removing a child fixes it, and when it doesn't, and what you must verify before you sell or transfer the home. If you are the personal representative, executor, updating your will or trust in California, this matters. Subscribe to our channel and click the notification bell for more information on the probate process and how to hire professionals to help you. Let's start with the foundation. Step up in basis is a federal tax rule. It means this: when someone dies, their property's tax value is reset to the fair market value on the date of death. Not what they paid, not what Zillow says today, the value on the date they passed. Why does this matter? Because when you sell an inherited home, capital gains tax is based on the difference between the sale price and the tax basis. If the basis is stepped up, your tax bill is often very small, sometimes zero. If it is not stepped up, families can owe tens or hundreds of thousands of dollars. Here is the key rule families miss. The step up is based on who owns the property at the moment of death, not who used to own it, not who helped pay the mortgage, not who lived there. Ownership on title at death is what matters. This is where problems begin. Many parents were told this advice years ago. Just add your title to the deed. It will avoid probate. It will make things easier. In California, that advice has caused enormous damage. When a child is added to the deed, the IRS may see it as a gift. The child may now own a real percentage. The parent may have unknowingly given up full ownership. That single change can destroy a full step up in basis, trigger property tax reassessment, create a sibling conflict later. And the worst part, most families do not find out until after the parent dies, or worse, after the home is sold. Let me share this story with you. A family in Orange County came to us after their mother passed away. The home had been in the family for over 40 years. Earlier, a well-meaning neighbor told the mom to add one child to the deed, just for convenience, they said. After the family realized that was a mistake, they had an attorney remove the child from the title and put the home back into mom's name only. Everyone assumed the problem was fixed. Mom passed away, the child inherited the home. They sold it quickly, then the tax bill arrived. The IRS questioned whether the child had truly given the ownership back. The deed language mattered. The timing mattered. The records were unclear. That the family thought was a clean step up turned into months of CPA review, amended filings, and stress. during a time of grief. This happens more often than people realize. This is where many families get confused. So let's slow this down. There are two different systems at play. Step up in basis. It's a federal tax rule affects capital gains when you sell. Proposition 19, California property tax rule, affects whether the low tax rate transfers. You can have a full step up in basis and still use the low property tax rate, or keep the tax rate and still have basis problems. They are not the same. Adding or removing a child from title can impact both, but in different ways. This is why families who do everything right still get hit. If you are managing a probate or trust property right now, there are steps we guide families through. Step 1, confirm ownership at death. Was the parent sole owner on title? Was the child fully removed? Was the deed recorded correctly? Step 2, review the deed history. How was the child added? Joint tenancy, gift, trust transfer? This affects how the IRS views the transaction. Step 3, coordinate before you sell. Before listing the home, we always recommend CPA review for basis, estate attorney for review of title, probate, experienced realtor guidance for timing. Selling too soon can lock in mistakes. Step 4, watch deadlines. Missing key probate or tax dates can trigger penalties, delay distributions, increase family tensions. This is where the pressure shows up. Everyone wants answers, and everyone wants them fast. Our role is to slow the process down just enough to protect you. If you take one thing from this video, let it be this. Step up in basis depends on ownership at death, but deed history still matters. Removing a child from the deed often fixes the problem, but only if it was done correctly, and only if it is verified before major decisions are made. We help families review deed history, coordinate with CPAs and attorneys, decide whether to keep, rent, or sell, navigate probate timelines without panic, protect both taxes and family peace. We guide, we do not push. If you are feeling overwhelmed, that makes sense. This is not just paperwork. This is your parents' legacy. If this video helped you, subscribe for more guidance on California estate probate, will and trust, inherited property decisions, step-up bases and taxes, senior home transitions. And if you need clarity now, reach out. We help Orange County families make informed decisions, calmly, clearly, and with respect for what this moment carries. You do not have to figure this out alone. You have our support. The above is intended for informational alone. Be it legal or tax advice, please go to the individual you have selected, or I can help you in your search for a CPA or an attorney. Thanks for watching.